Welcome back to Investing Talk Podcast.
Today we're looking at USA rare earth.
Right. And, as usual, before we really jump in, please subscribe, like, and drop a comment on this video. It really helps the show. And, hey, if there's a company you want us to break down like this, just leave it for us in the comments.
So let's get into the analysis. With USA rare earth, we're not just, talking about another mining company.
Yeah.
We are really looking at a response to a huge global vulnerability. This is a pure play on securing a domestic U.S. supply chain for these high-performance magnets.
Okay, let's unpack that because the whole story here is vertical integration, but the thing driving it is, well, it's pure geopolitics.
It is.
We're talking about critical material independence. The whole mission is to turn this company into the first fully integrated producer of rare earth magnets in the U.S.
And that why is so important for the context. I mean, right now, for the heavy rare earth magnets, and these are the ones you need for national security, for things like aerospace, guidance systems, missiles.
Oh, those serious stuff.
Yeah, all the serious stuff. China controls, well over 90% of that entire supply chain, from the dirt to the finished magnet.
Right. So the U.S. government, the big defense contractors, they look at this and see a massive, almost existential national security risk.
Exactly. If you want to build an F-35 or a wind turbine or even an advanced EV, you need these magnets.
And right now you have to go through one main source in Asia for them. So USA Rare Earth is trying to fix that. They're building a mine-to-magnet solution right here.
And they have two major assets that make this strategy possible. First, you have the supply. They've got significant interests in Round Top Mountain. That's in Texas.
Okay.
What makes that deposit so special is it's not just any rare earths. It has the really critical, hard-to-find heavy ones. We're talking dysprosium, terbium, plus lithium.
And that Texas deposit is, by all accounts, a really big deal, isn't it? It's seen as one of the only large, economically viable, heavy rare earth deposits outside of Chinese control.
Anywhere in the world, yeah. But getting the raw material is just step one. The real value, the real money is in the processing.
Which brings us to the Stillwater facility.
That's where the magic happens. That's where they take the raw material and turn it into a finished high-performance magnet. And this plant, the Stillwater plant, is set to be the only new U.S.-based magnet factory to come online since, the 1990s.
Wow.
This is the future revenue engine.
And they did something really smart to speed that whole process up. Just recently, back in November 2025, they bought a company called Less Common Metals, or LCM.
That was a brilliant move.
It instantly brought critical alloy production capabilities in-house. Before that, they would have had to rely on an outside supplier for that middle step. Now they control that whole technical process.
And controlling the alloy production is key to capturing the kind of margin that we'll talk about in a bit. But there was an even more interesting sort of immediate win that came with that LCM deal.
I know exactly what you're getting at. So right after they bought it, this new subsidiary, LCM, it locked in a binding 9-year supply agreement.
Right, through 2033.
With Arnold Magnetic Technologies. And for anyone who doesn't know, Arnold is a major supplier to the defense and aerospace industries.
It's a huge vote of confidence. And it really mitigates a lot of their execution risk, It basically locks in a baseline revenue stream for the alloy feedstock.
Even before the main factory is running.
Exactly. It shows the defense industry is already lining up, ready to sign long-term contracts for a secure domestic supply.
So that's the big picture. A high-stakes, vertically integrated play on a critical national security problem. But these industrial projects, they're always expensive. So let's look at the financials, because this is not a business that's making money yet.
No, and that's the absolute critical counterbalance here. This is a development stage company. If you pull up the standard financial statements, they look, exactly like you'd think. They're loss-making.
Right.
Trailing 12 months net income is negative, around $107 million.
Right.
They're funding all this work through equity and project financing.
That's the classic red flag for a company like this. But the balance sheet, it tells a slightly different story about how much time they have. The market cap is high, sure, around $1.96 billion, but the company is sitting on a lot of liquidity.
Yes, and that context is everything. They have about $420 million in pro forma liquidity.
Okay, so pro forma liquidity, for everyone listening, that just means the cash they have on hand plus capital they know is coming in very soon.
That's right. In this case, a lot of it came from recent warrant exercises in the fourth quarter of 2025.
So let's pause on that. What's a warrant exercise and why should we care?
Right. Think of warrants like long-dated, cheap stock options. When insiders or big investors exercise them, they're paying the company cash to turn those warrants into shares.
So the fact that insiders are pumping hundreds of millions into the company right now.
It signals extreme conviction from them that the stock's future value is much, much higher than the price they're paying. And for the company, it gave them this massive cash buffer to work with.
So that $420 million buffer is the key. It gives them the runway they need to hit their big inflection point. They expect it to fund them comfortably through 2027.
Precisely. And that inflection point is coming up fast. Q1 2026, that's the commissioning of the Stillwater magnet facility. Once that factory is up and running, the path to revenue gets very steep, very fast.
So what are the near-term revenue numbers they're talking about?
Well, the initial ramp up is what matters. By late 2026, they're aiming for somewhere between $50 or $75 million in magnet revenue.
Okay.
Then by 2027, the goal is an annualized run rate of over $200 million. But it's not just the amount of revenue that's exciting, it's the potential profitability.
And this is where that whole vertical integration thing really pays off, right?
Absolutely. Because they control the whole chain from the mine to the magnet, they capture margin that almost no one else can. Heavy rare earth magnets, they command this huge gross margin premium, like 50 to 70%, just because they're so scarce and so critical for defense and aerospace.
That is just immense potential, but it all depends on them executing. So let's shift to the timeline. What are the big catalysts coming up that could actually move the stock in the next few months?
Operationally, the single biggest date on the calendar is that Q1 2026 commissioning, getting Stillwater online for commercial production.
And they've already reduced some of the risk there, haven't they?
They have. They successfully produced initial trial batches at a smaller lab, which proves the process works. Now it's just about scaling it up to an industrial level.
And investors will be watching that ramp up like a hawk. The Q3, Q4 earnings release should be late January 2026. And that's not just about looking back, it's about looking forward. What are you looking for in that report?
For me, it's clear 2026 volume guidance, an update on how the LCM acquisition is being integrated, and any news on the long-term permitting for the Round Top mine.
But the biggest catalyst, the really high-impact speculative one, has to be government support. The CEO said back in October 2025 that the company is in close communication with the White House.
Right, and you have to ask why the market reacts so strongly to just a meeting. It's because there's a very powerful precedent here. We saw what happened with MP materials.
They got a massive $400 million deal from the Department of Defense, plus guaranteed offtake agreements.
And can you quickly just define offtake agreement for us?
Sure. It's basically a guaranteed buyer. The government promises to buy a certain amount of your product over a set number of years.
So if the DoD were to sign one of those with USA Rare Earth, it would just instantly de-risk the entire business model, wouldn't it?
Completely. It guarantees revenue. It basically turns a high-risk development company into a subsidized national resource. The market is pricing in the hope of a similar deal.
So we're not just talking cash, we're talking certainty, which is priceless. And then you have other potential catalysts like, a big supply deal with a GM or Stellantis for their EVs, or a major defense contractor like RTX.
But all eyes are on that White House dialogue for now. Any positive news there could really move the needle.
Definitely.
So let's look at the technicals. The stock has been all over the place this past year. I mean, a 52-week range from around $5.50 up to nearly $44. That screams momentum.
It's volatile, no doubt, but the trend is long-term bullish. The stock is trading above both its 50-day and its 200-day moving averages. That shows a clear uptrend since the middle of last year. And trading volumes are strong, which supports the move.
And the recent price action, especially after that White House news, it looks like it's consolidating. It's forming what chart analysts would call a bull flag pattern. What does that mean for an investor?
A bull flag basically suggests that after a big run-up, the stock is taking a healthy breather. It's trading sideways without really giving back the gains. It shows buyers are stepping in to defend this new, higher price level. Support seems to be holding strong around that $16 to $17 area.
If the good news comes through.
If the good news comes through, whether it's Stillwater coming online or a government deal, this pattern suggests we could see a breakout towards, say, $24 to $27, with $30 being that next big psychological target.
And the analysts seem to agree with that potential upside.
Oh, definitely. Analyst price targets are suggesting pretty substantial upside from here. The highest ones are pushing $40 or more. That high conviction really reflects this belief that the government support thesis is very likely to play out.
And it all comes back to that insider conviction we mentioned with the warrant exercises. Insiders are putting their own money on the line, betting that the fair value is way higher than where the stock is today.
It's the strongest signal you can get from management right before a major inflection point like this.
Okay, so the bull case is strong. You've got high margins, geopolitical necessity. But a company that is still burning cash always comes with major risks. What are the big ones people need to watch out for?
The price absolutely reflects massive risks. The first and the most important is execution risk. This is a huge industrial project. Building and commissioning a complex new magnet facility, one that hasn't been done in the US since the 90s, is incredibly difficult.
So what if it's delayed by a quarter? Say it slips from Q1 to Q2 2026. Why is that such a big deal?
Because the clock is ticking on that cash pile. If commissioning is delayed, revenue is delayed, and cash flow is delayed. That puts pressure on their $420 million runway much faster than planned. A delay like that could easily cause a 20 or 30% drop in stock, at least temporarily.
And the second major risk is tied directly to that speculative hope we talked about. Government support falls short.
Exactly. The stock is trading where it is because the market expects a huge DoD deal, like the one we saw before. If that support package comes in much smaller, say only 100 million instead of 400, or if it's delayed past the middle of the year, that speculative premium could just, poof, evaporate.
You could see a 30 to 40% downside risk from that alone.
Easily, even if the long-term story is still good. And then, of course, you have secondary risks, like commodity price swings for rare earths and lithium, and the really long-term permitting challenges for the Round Top mine itself, though that's not the immediate driver.
So when you weigh the risk versus the reward, this is what you'd call an asymmetric play.
Absolutely. Meaning the risk of losing 30–40% is very real, but the potential upside, if they execute on the factory and they get that government backing, could be several times the current stock price.
So it's a bet on technical execution meeting geopolitical necessity.
That's the perfect way to put it.
USA Rare Earth is trying to solve a huge structural problem in the U.S. supply chain. These materials are critical for defense, for the energy transition, for everything. They have the resources, the processing assets, and most importantly, the cash runway to get it done. The next 6 months, with the Stillwater commissioning and potential White House news, will be absolutely pivotal.
The structural story here, controlling your own destiny in a zero-sum world, makes this one of the most compelling industrial stories out there right now.
If you want to follow up on this analysis and other critical market developments, be sure to subscribe to the Investing Talk podcast. We'll be tracking these milestones closely for you.